Hey guys, I want to do this analysis about SPY, the Q, the TNX, the VIX, and you guys are probably aware of the scandal or the fact that the banks have failed. A few banks have failed last week, which is really bad, and it can create a ripple effect, and it can affect also the stock market, the ETFs, and several other stocks, as well as businesses. I mean, it's a mess. It's worse than it seems, or it's worse than the media makes it sound. So, with that being said, I'm going to leave the news out of this video and I'm going to jump right into technical analysis. So, let's see SPY. Really quick. Indicators. MACD below the zero line, going down, diverging even more. So that's really bearish. RSI is going down. PMO is going down, approaching the zero line. That's really, really bearish. Moving averages. 5 days pointing straight down, below the 20 days pointing straight down, below the 50 days double exponential moving average pointing down. Also, the price closed below the 5 days double exponential moving average, which is also really bearish. Where SPY is going to go, because we clearly left the peak of the volume that is over here at 396. Well, we can draw Fibonacci, and because we broke the low was over here. Okay, we broke below. That's what I said on my other video. I said, well, if it close below this level, then watch out. And we can draw Fibonacci. We're gonna go from the top over here to the bottom over here, all the way to the lower high. And Fibonacci is 383 on the 100% move, which is basically this level over here, and then 161, which is a little bit below the bottom of the level over here. So it's 370. That's where SPY is heading. Sorry guys to give you this news, but that's what it is. 370 would be basically here, and it corresponds actually to this level, about this level, which was support, resistance, support, support, support. And then it was resistance, 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 support. So it's a key level, and that there isn't much to add to it. To confirm my analysis, we can go on the weekly time frame, and you can clearly see that the 50 days double exponential moving average is starting to point down. The 5 days double exponential moving average is crossing below. The 20 days double exponential moving average is pointing down. The price closed below all these three moving averages. And most importantly, we made a bearish engulfing candle. Look at this. Look at this. Okay. And the candle covers above. Okay. Covers the entire previous candle. Also, the MACD is pointing straight down, about to cross again to the bears. And if that happens, it's going to be below the zero line again. So that's bearish for a weekly chart. And so it's going to be a long period. It can be, a couple of months. That's the time frame that I'm picturing for to be bearish on SPY. Now, if we look at the Qs, that's www. It's not what I wanted to type. The Qs on the weekly time frame, we are basically, on this channel, downside channel that I draw, we got rejected completely. We made a bearish engulfing candle, as you can see, because englobed completely the previous candle. The MACD is going up, but now it's curling, okay? So if it curls and it crosses to the bears, then it's bad because it's below the zero line, okay? On the daily time frame in the Qs, let me delete all this. It's kind of similar. It's a little bit less worse than SPY, but it's similar because we closed below this level, which was a previous low, and so we can draw Fibonacci. And by doing that, we have this high, this low, this higher low. We are not even at 100%, so it's worse than SPY. Uh, the Qs can go to the 100% level, which is 280, and it's kind of at this level over here. There was previous support, and then resistance, and then support. So it's a key level, the 100% at 280, or 161% at 267, which kind of corresponds to this level where there was some sort of accumulation phase, okay, before ripping up. That's what I see in the Qs. All the moving averages are bearish. I'm not going to go over it. It's basically like SPY. MACD pointing down, approaching the zero level, RSI pointing down, PMO pointing down. All the indicators are bearish, so there is a lot of bearishness that is going to happen in the Qs. Now, to confirm all of this, we would like to take a look at the VIX. The VIX spiked yesterday and the day before. It basically this line that I draw, the previous low, acted like a level of support, and we bounced up. We closed above the previous high. There it is. So we can use now Fibonacci. Fibonacci, we're going to draw the low, the high, the lower low, actually the higher low, and we basically are at the 161% move at 26. With the VIX is now 24.8. All the indicators are bullish in the VIX. MACD cross to the bulls above the zero line. 5 day, all the moving averages are bullish. So this is not looking too good for the bulls, for the stock market bulls, but it's looking good for the VIX bulls. Now, if we go on the weekly chart, and let me delete this yellow line, the weekly chart we just started. Okay, the MACD is below the zero, so this could be a bounce, and if it doesn't take, it could retest the previous high. Okay, but if it doesn't take, if it doesn't go above the previous high, this can easily be just a bounce, and then the VIX will go further down. But overall, the previous high is at this level at 33, so it's like $10 move, which can be bad for the major indexes. That being said, the last thing on this video is going to be the TNX, the 10-year Treasury, not TTNX, TNX, the 10-year Treasury. We bounced. No, this is the weekly. So we basically bounced on this major level that I draw here, this line. So there could be some bearishness. Definitely the news is not going to play in the TNX favor, and the MACD is bearish. The RSI is going down. The PMO is bearish. So this could be a phase of accumulation, or simply a phase in which a technical bounce to the downside. Let's put it that way. If we zoom in, just to have an idea where we can go or not go, well, we made a gap, so at some point we gotta fill this gap up. And the gap is down, but we gotta fill it to the upside. Yeah, the moving averages are curling down, the MACD is pointing down, so I don't like this price action at all for the bulls. We can use Fibonacci retracement to go from the low all the way to the high, and the Fibonacci retracement has already played out. The 50, we are approaching the 60 level, so that's not too good. That is really not too good. But here's the thing: we can keep an eye on this level that we just approached. because because this is a resistance, then we broke below, and then it acted like a support, then we broke above, it acted like a support, and then we broke below, and this was resistance here, support, resistance here, support here, and now we gotta find out if it's gonna act as a support or we break below. That's all I have for stock market analysis. If you would like to see or have an analysis in some stock, just feel free to leave me a comment and I will try to satisfy your request. Other than that, if you can leave me a like, comment, and follow, then I will be really